Hello, everyone. This is Kathy. If you can see my screen, hear my voice, let me know. Say hello. Either in the Ask Kathy room if you're a BK member or in the YouTube live stream. Let us know where you're tuning in from. Let us know you can hear us so that we know everything is working as it should. I'm going to check my audio settings. That looks good to me. I haven't heard anyone say hello and say hello from where you're from. So please let me know, because otherwise I will not know that everything is working. Hi, Jason. Hi, Ron from Australia. Thank you so much. I guess there is always a bit of a delay. Good morning, everyone. Let's get rocking and rolling. This is going to be a very, very busy trading week. It's, going to be a trading week that is full of not only market moving data, but economic data that is that could very well set the stage for how many of these major currencies move in the weeks ahead. Hello, my friends from Montreal, Singapore, Hong Kong, Bangladesh, LA. It's very early in LA. But I guess if you are a FX trader, in the West Coast, you do have to have very different hours. Hello, Jamal from North Africa, and a lot of Australians. It's also very late at night for you. All my dedicated traders getting ready to prepare for this week's incredibly busy trading week. So to start, last week we had, or I guess not last week, but earlier this month, we had, pretty weak US jobs report. And last week, we had a softer jobless claims report. So now everyone, and the question on everyone's minds right now is, has the US dollar peaked? Has the US dollar hit a top? Or are we just seeing consolidation before a further push higher? And the answer to that question very much lies in what happens this week, very much lies in how this week's U.S. economic data fares. We have a lot of reports from many corners of the globe, but if you've been listening or joining me for our live streams for some time, you will know that in general it is U.S. data, U.S. markets appetite for U.S. dollars that really determines how the market in general trades, not just how the dollar trades, but also how gold trades, how oil trades, how stocks trade. So the market's appetite for US dollars very much determines it all, and that is going to be the case this week as well. That's going to be the case because we have two pieces of very, very important US data, and those two pieces are going to be the inflation report along with the retail sales report. And we'll take a look at those more closely in just a minute. But aside from that, we have a lot of other things going on this week as well. We have Eurozone first quarter GDP. We have Japan's first quarter GDP. We have Chinese, very important Chinese data, industrial production, retail sales data. We have Australian jobs. We have UK jobs. We have Eurozone industrial, German zoo survey, Eurozone industrial production numbers. So a very, very heavy economic calendar, chock full of market moving events. So, US data will, regardless, determine how everything trades. But there could be, and I love this, there could be a lot of cross-trading opportunities. Like I personally, if you're a BK member, you will know that I love to trade Euro Aussie, Euro Kiwi, Euro CAD, Aussie Swiss, Aussie Kiwi, Aussie CAD. And the opportunities and the direction for those trades will be determined by a lot of these economic reports that I just talked about, not just the US data. But with regards to the question of whether the US dollar has peaked, we'll look at the fundamentals in a second. But the one thing I want to show you is I'm going to remove these indicators. I'm just going to pop on the dollar index here. And I want to show you how we're going to add on US 10-year yields. And let me just move this to the different side. Okay, pin scale to left. All right. And let's just make this regular, and I'm going to make this regular, and you'll see the candlesticks are the US dollar index, and the orange line is 10-year treasury yields. And you will see that first off, 10-year treasury yields certainly look like they have peaked as well. And when you have 10-year treasury yields peaking, that kind of quote unquote confirms that the dollar has peaked. Of course, now we're in a little bit of a consolidation mode, and the markets are consolidated today as we wait for the big reports this week, and CPI retail sales could change this. But CPI retail sales, we'll talk about those more in a second, are expected to be weaker. And if CPI and retail sales are expected to be weaker, then this orange line, which is 10-year treasury yields, could fall further. And if that's the case, that could very much cement the top in the dollar index. And you can see that we're going to look at let's look at a monthly chart here. And you can look at a monthly chart here that for the most part, the dollar index just moves in lockstep with yields. And if you look very, very, very closely, you'll see that the orange line oftentimes precedes the candles, which means that if there's no sound for you, Ali, it must be, I guess, it must be his problem, because everyone else can hear me, I believe. So what I'm trying to say is that the yields are definitely signaling a top in the dollar. And when you have yields potentially signaling a top in the dollar, data also showing that we're taking a turn, that positive data surprises may have peaked as well. And then also I'm going to take away this. We've been watching this for some time. We could very well here and here on a technical basis have a double top in the dollar index. And, you know, it's no coincidence that this is not far from these levels here. And if we drew a horizontal line, you'll see that it is also a congestion point that we had over here. So there's a lot of reasons to believe that we have seen the top in the dollar. Now, this high here is a significant one. And that's where the first level of support, and I would even bump it to just somewhere around here, probably around this low here, 104.85 is the first level of support in the dollar index. And then below there, 104.50, and the 104.50 is taken out, it's all the way down to 102.50 possibly for the dollar index. So a lot going on here, and a lot of that will be determined by the inflation and retail sales report that's happening on Wednesday. Now, for those of you that are going to be around for retail sales and CPI, we will be live trading retail sales and CPI. I'm going to drop in the link. So make sure you bookmark this and make sure you subscribe to our channel and hit the notifications bell so that you can participate in the live trading session on Wednesday with Boris and I beginning at 8 a.m. I'm very, very excited about that. So talking about the dollar, I am neutral bearish dollars this week. And the reason why I am neutral bearish dollars is because first off, you know, the data is significant. So I can't necessarily, you know, be overly bullish or bearish, but I think there's plenty of reason to believe that we're going to see inflation and retail sales surprise to the downside. Now we get the first look at the inflation data tomorrow. Because tomorrow, I know we're skipping ahead to what we normally do, but tomorrow we have the US PPI report. So PPI is a leading indicator for CPI. You know, it's not a stretch to imagine. You know, a lot of times I talk about how one piece of data can be a leading indicator or a clue as to how another piece of data could surprise. And, you know, PPI, which is producer prices, no surprise there, is a leading indicator for consumer prices. So we get the first sign of producer prices tomorrow. And as you can see, producer prices are expected to rise. Producer prices are expected to grow at a faster pace on the headline level, but grow at the same pace on a core basis. And then on Wednesday is the big day. Wednesday, we have consumer price index. And you can see that CPI, where's the inflation rate, is expected to grow by 0.4%. But the core inflation rate is expected to slow from 0.4 to 0.3. And the core year over year is 3.8 to 3.6. So let's take a step back. What's core? What's regular? Core basically includes, you know, the less volatile food and energy costs. And really what the Federal Reserve is supposed to be watching. But in reality, the Federal Reserve cannot ignore the headline number either. So in order for CPI to be truly bearish for the dollar, in order for CPI to truly drive the dollar lower, we need to see the headline number and core number surprise to the downside. Because if we just get the core number surprise to the downside and headline number beats, the market's be like, okay, that's bad, but it's not bad enough for the Federal Reserve to jump in and say, all right, you know, July instead of September for the first interest rate cut. Now, whenever we look at CPI, we always look at gas prices, and I like to go to the site gasbuddy.com. So we're going to go to gasbuddy.com, which you will see on my screen, and I just scroll to the bottom, fuel price data analysis, and we're going to scroll down here. This is all we need to know, which is I just want you to look at the green line, current. So this is the April inflation data, and you will see that the green line is going up. So here was March, $3.46 a gallon was the average price in March. In April, it went up to $3.63 or 64 cents a gallon. So that tells you that gas prices increased in the month of April, increased into April. Now, April to May, gas prices held steady from $3.64 to about $3.64. So in April, which is the data that we have, April, gas prices pretty much held steady. So there was no positive contribution from gas prices. And let's take a look at oil prices. Oil prices between April and May, this is basically oil prices, between April and May basically went down from almost $88 of a pretty much one-way downtrend. And yes, hit the like button if you like this. I always like positive reinforcement. So oil prices went down in April. So oil prices went down, gas prices went down. And let's look at one more thing, which we had up in just a second ago. Dollar index. Let's get rid of all this random stuff. In April, yes, it wasn't until, look very closely, it wasn't until May that dollar index dropped. So in April, dollar index actually rallied. So what does all this mean? First of all, process of, kind of analyzing the data. Number one, gas prices fell. So that's lower inflation. Number two, oil prices fell. That's lower inflation. Number three, dollar strengthened. A stronger dollar is lower inflation. So from all those three perspectives, we have plenty of reasons to believe that inflation will indeed surprise to the downside. And so when we started off, we talked about how the dollar may have peaked already or should have peaked already, and we're just waiting for Wednesday's data for confirmation. And because we saw that gas prices are lower, we saw that oil prices are lower, and we see that the dollar index is stronger in the month of April, which pushes down price pressures. All three signs point to lower inflation. And so that's why I'm neutral bearish. I'm more bearish than neutral. And actually, BK traders, we actually, and I'll show you in a second, we kicked off the week by selling dollar Swiss. And we sold dollar Swiss because, I'll show you one second. We sold dollar Swiss because we had a zip sell signal in dollar Swiss. The white candle here is our zip sell signal. Now we have something over here, but this is the weekend, so it really doesn't matter. And I always like to say that when it comes to trading, it's important to know when to trade and when not to trade. And so kicking off the New York session this morning, we had two zip sell signals. One here right at the start of the New York Open and one over here. So we've actually sold dollars in anticipation of the dollar falling further ahead of the US inflation data. That's how we combine fundamentals with technicals. And then, of course, there's retail sales. Retail sales is obviously very, very important. And, there's been a lot of corporations giving negative guidance and kind of attributing their miss in earnings to softer demands. With our BK traders, Boris, we do these live streams every day. And on Friday, Boris talked about how Starbucks reported a huge miss in earnings, first drop in same-store sales since a very long time. And basically he said that Americans are not wasting their money on lattes. McDonald's also reported weaker earnings, and they directly said it was a result of softening consumer demand. So I think that we're going to see that in retail sales. I think we're going to see, the market already expects it, retail sales growth to slow. Now, what's really interesting about this, and this is where the trader mindset of all of us should come in, is that the economists are predicting weaker retail sales and slightly weaker inflation, but the prices are not showing that. Traders are not positioning for weaker retail sales. Dollar Swiss has not fallen all that much. Eurodollar's up a little bit. Eurodollar's in more of a, it's in the buy zone, more of a runway upward track. Dollar yen has definitely not priced in a weaker number. So when you have the positioning in the market misaligned with the expectations from economists, from what everything else is telling us, then that creates a real opportunity. That creates an opportunity to maybe, in my opinion, sell dollars ahead of the news and or ride any big move that comes off of this data miss, trading the news reactively, which is what we're going to do with all of you on Wednesday. So make sure in the YouTube chat I put in the live stream link for live trading CPI and retail sales on Wednesday. Make sure you join us at 8 a.m. on Wednesday, because we're going to be live trading with you, because there's an opportunity, which, you know, I'm already short dollars going into the inflation and CPI data, and that trade will most certainly be closed before the number. And then we're going to be flat. We're going to wait for the number to come out, and then we're going to trade it reactively. And that's what we're going to do with all of you on Wednesday. So there's, you know, kind of a two-pronged probability, and that is why I am neutral bearish dollars. I'm also neutral euros. I want to be, and the reason for that is because, you know, Eurozone GDP is due for release this week. And Eurozone GDP is expected to be stronger. This is the first time we've seen an upside, a positive Eurozone GDP number in a while. And Eurozone data has certainly shown stabilization. But ECB is still expected to be one of the next central banks to lower interest rates. And if the ECB is one of the next central banks to lower interest rates, that should be bearish euros, right? But this week, the focus is going to be on the dollar, and that's why the euro is rallying. We have Eurozone zoo survey tomorrow. That will be interesting. We have Eurozone GDP numbers later this week. That'll be much more important for the euro itself. So that's why I'm neutral bullish euros. I'm bearish pounds. Last week, it was a dovish hold from the Bank of England, and they ruled out interest rate cut. They said the market is maybe not pricing in enough interest rate cuts. I think that's super, super bearish. Pound is up today because the dollar is down, but still, with that said though, I am bearish British pounds, and of course, you know, probably the better opportunity is euro pounds. We also have UK jobs numbers this week, which is expected to be softer as well. So I'm bearish pounds. As for Aussie, we have Australian jobs numbers, we have Chinese industrial production, retail sales, and something else later this week. And overall, Aussie should, you know, the Chinese data is supposed to be better. The Australian jobs number will be interesting because the previous Australian jobs numbers have been very, very good. And so this month we have stronger manufacturing PMIs, but the weaker services data. So that may not come out as strong as we'd like. I'm super bullish CAD. You know, CAD is not necessarily responding the way I like, because we had a very strong IV. And we also had very strong jobs numbers for Canada. So I will be looking for an opportunity to buy Canadian dollars this week. We don't have any CAD data, but perhaps because we don't have much CAD data, it's a really good cross trade. Kiwi, I'm neutral. We had Kiwi, PSI, and PCI this morning. They were overnight. The PCI was stronger, the PSI was weaker, the inflation data was weaker. Kiwi is the weakest performing currency right now, because this week is focus for Kiwi is on inflation, including the food inflation data we just had, and then producer prices at the end of the week, and both of which are expected to be bearish, or one of them is already bearish, and that shit is why Kiwi is underperforming. Swiss franc, I'm bullish Swiss francs. You know, as I said earlier, we have gone short dollar Swiss at BK Traders for a swing trade going into the Wednesday's economic reports, because I'm bearish the US data. Also with Switzerland, we had stronger inflation data, we had stronger unemployment report, and this morning we had stronger business confidence. So all of those makes the Swiss franc a much more attractive trade. Yen has been the bane of everybody's existence. I do think yen is going to pull back, but there's a lot going on for Japan this week. We also have Japanese GDP numbers, first quarter GDP numbers that's going to be released, and that's very, very important. The first quarter GDP numbers are actually expected to be a little weaker. And then last week, if you joined our Kathy's Caffeinated Market Buzz, I talked about how the average weekly wages, or whatever the wage number was expected to be lower, and that was going to keep the yen under pressure, and that happened. That drove the yen lower. This week, the GDP number is expected to keep the yen under pressure as well. And then we also have about $2.5 billion worth of options expiring just underneath the 160 level. Now we're very far away from 160. We're at 155.75, but that's been, you know, why there's, you know, so much, you know, congestion zone around the 160 level. But overall, I do think the yen will be find it difficult to resist any dollar weakness this week because the inflation data and the retail sales numbers are so important, but the GDP number from Japan is also very important and could shift things a different way. Now, taking a look at the economic releases, as I said earlier, PSI was released, and that was weaker. The composite PCI number was stronger, so that's a wash. But what really everyone cared about was business inflation expectations, which is a leading indicator for the producer prices, and that came in lower, and that's bearish for Kiwi. This morning we have stronger Swiss consumer confidence. Building permits from Canada came in actually very, very weak, so that's probably why CAD is lower. We have SMB Jordan speaking later today, and then we have Japanese producer prices tonight. And then on Tuesday is when, actually, where is this? Tuesday is when we get the final German inflation data, no major revisions expected. UK jobs numbers are supposed to be very, very weak. Look at this, 215,000 against 156,000. Huge drop in the employment change number. And then we have the German ZOO survey, which is expected to be stronger. So this really creates an interesting opportunity in euro pounds, because look at that. Euro data is expected to be stronger and pound data is expected to be weaker. We are resisting underneath around the 200-day SMA, but I do think this is moving, this is potential to move to the upside. And for those of you that are joining us late, we talked about how the dollar index slightly peaked so at the beginning. So I encourage you to rewatch this so you listen to the first 10-15 minutes when we talked about the dollar index peaking. So then we have US PPI, which is a leading indicator for CPI, and that, the economists are looking for a stronger number, but I think there's risk for a downside surprise. Powell is also speaking this week. Now, I don't think the topic of his conversation is going to be, where is this? Basically, Powell, just looking at the Fed speak calendar, he's moderating a discussion with the, this is a moderated discussion with the head of the Netherlands Central Bank president at the annual meeting of Foreign Bankers Association. And this is happening at 10 a.m. tomorrow. I'm not sure. I don't think he's going to say anything market moving, but you never know. So at 10 a.m. he's speaking tomorrow on a moderated discussion. So that is still interesting to watch. And then on Wednesdays, when things get super, super interesting, we have the Eurozone GDP numbers coming out. That is expected to be stronger. Another reason why I'm neutral bullish euros. And then we have the US. Nothing's more important than the US inflation report and the US retail sales report, both of which, and we outlined the entire case in the beginning of this live stream, so please go back and watch it. Outline the entire case for why the US inflation and the retail sales data could surprise to the downside. We also have Empire State Manufacturing Index, but I think that's going to be lost in the shuffle for all of this. And remember, I'm live trading CPI and retail sales with you. The link is in the YouTube live stream chat. Make sure you bookmark that link and put it on your diary. Then on Wednesday evening, we have first quarter GDP numbers from Japan. Look at this. Contraction. Back to contraction, which even on a headline basis is a really bad news. It's return to contraction, which is very bearish for the yen. It'd be very hard for the yen to rally if GDP drops. So watch, and that's what the market anticipates. And then we have Australian labor market numbers, stronger number expected. But the PMIs have been kind of mixed. This is going to be a tough call. But Aussie could rally going into that. And then on Thursday, we have Japanese industrial production numbers, U.S. housing starts, building permits, Philly Fed index. All of this, especially the manufacturing data and the Philly Fed, will be looked at through the lens of reinforcing the Wednesday's reports. Either it's going to reinforce it and compounds the move, or it's going to cast doubt on it and have less of an impact. So it's really going to be market moving if it reinforces the Wednesday's reports. And then on Thursday evening, we have the industrial production, retail sales, and unemployment rate from China. That's going to be very important for the Australian dollar. And we close out the week with Swiss industrial production numbers, Eurozone final inflation data. Usually this is not a huge market mover. And that's it. So really, Wednesday is the big day. And I said earlier, we are going to be live trading that with you. We're going to be live trading it reactively. And we already have positions on proactively. So, there's definitely a lot of big moves that will happen out of that. Euro dollar, technically we are above the 50 and the 100 SMA in the euro dollar. We do have, sorry, 50 and 200 SMA resistance up at 105, but I think with my bearish view in the dollar, I think we're going to see the euro continue to tick upwards this week. Pound dollar, I'm bearish pounds, but pound is certainly, there's nothing going to matter more this week than the market's appetite for US dollars. So pound is rallying because of that. And that is why if you're bearish pounds like me, it's better to express it through euro pounds than it is through pound dollar. But pound dollar, technically though, it looks like it could get up to 126. Dollar yen is consolidating here. And, basically dollar yen, I would not touch this unless we break below 155. If we break below 155 on a closing basis, then I would short. But otherwise, I would stay out of it. Dollar Swiss, I showed earlier how dollar Swiss, you'll see it in just a second, just triggered a sell signal, a zip sell signal. And so between my fundamental outlook, my technical outlook, and the zip sell signal, I think that dollar Swiss could very much move lower. And if you are interested in understanding more about zip or how to combine fundamentals with technicals, in the description of this video I will include all of the links that I think are important. Aussie dollar above all of the major moving averages. Economists are looking for stronger Australian job growth. Risk on. Stock futures are up today. I think Aussie is going to lead the move. Kiwi, on the other hand, is lagging behind because of the weaker PMIs. I would stay out of the Kiwi trade because I'm bearish Kiwi. But there could be some interesting opportunities in Euro Kiwi to the upside or Aussie Kiwi to the upside as well. And then last but certainly not least, dollar CAD. I'm super bullish Canadian dollars because we had stronger Canadian jobs number. We had stronger IV PMI. Oil prices are up. And dollar is bearish. I think dollar CAD should move lower. Risk is on. I really like this trade. So I really like dollar CAD to the downside. So definitely take a look at that. And as I said, we are live trading US CPI and retail sales on Wednesday. I'll let Boris come in and tell you more about what he thinks for the week ahead, along with our live trading session and what he plans to do on Wednesday. Do you want to say hello, Boris?
Hi, guys. How are you? Let me get on camera for just one sec.
And in the meantime, please feel free to drop in any questions that you may have. Yes, I'm Chinese, Ryan, and it looks like you are as well. And yes, please rewatch the beginning. There's a lot of really valuable information on the dollar, on what the market and how misaligned the market is in terms of where things are trading at right now versus how things could surprise and how we should be trading as a result of that. So there's a lot of good information there. Feel free to keep pushing those questions through while Boris shares with you his thoughts.
Hey guys, good morning, good afternoon. Well, from the stock market point of view and gold point of view, I think the mantra today is if you're long, you're strong. It's really a smooth trade up all morning long. As you can see, I've just been scalping to the long side in the S&P. Same story in gold here. Just get the gold. Here's popping into gold. Generally, I think obviously the market thinks consensus view is that CPI will be relatively cool. That will open up the floodgates for the Fed to cut at least once, probably in September, and just kind of ease the market into a general risk-on flow. I don't know. I mean, I think we could be in for, let's put it this way. If that's true, I think the upside is relatively limited because so much of this is already being priced in, traded in before the event. If it's not true, especially if the CPI comes in, 20 basis points higher than expected, that could really create a pretty ugly week, I think, and create some very ugly candles for the market. So to me, I think the risk of trade lies to the downside, but of course, it doesn't matter for us. We'll trade it either way once it comes out. I just think that given the the general malaise or the general laissez-faire attitude of the market. Everybody is so complacent. There is a danger here that inflationary pressures could be large. The one thing that I think definitely is coming through, and Kathy referenced this with the Starbucks anecdote that I talked about on Friday, but much more importantly, Friday afternoon or Friday 10 o'clock in the morning, U of Michigan, which is the preeminent consumer sentiment survey, came in, was 10 points lower than the market expected. And yes, there's this massive disparity based upon political affiliation, but even on the Democratic side, there was a considerable decline, I think, in consumer sentiment. Generally, my own anecdotal evidence tells me when I speak to people, regardless of your economic status, regardless of your political affiliation, people are definitely feeling price pressures on spend, and those price pressures are starting to translate into a more muted, or at least a more selective consumer spend, and that may really start to impact margins. Remember, the great thing that's been driving equities so far has been this incredible expansion in margins as companies been able to raise prices essentially without any punishment to demand. And I think you might see some curtailment of demand now as we go forward, as there's just not much more wage gains to come out. So I think we need to watch all those factors. Equities, in my opinion, are coming to the end, the eighth or the ninth inning, as they say in baseball, if you're an American, or like the 85th minute of a football match. So I think we need to be careful about how much more there is to the upside if you're a long-term trader. And I do think that we could have some strong downside price action as the week develops if we get any kind of a fundamental catalyst to the downside. So we'll watch this very carefully. Gold remains unbelievably bid. It's so far has just refused to buckle under the 2300 handle. So we need to be watching that. Although a very, very sharp in CPI data, that will be a true test of whether there is an underlying bid in gold underneath the 2300, or whether we're going to see a more deeper correction in the precious metal. Otherwise, that's pretty much how the things shape up. The one saving grace to the economy, in my opinion, and the one thing that could really, really create enormous amount of pressures or enormous amount of problems for the economy is oil, right? Oil has just basically, let's take a look at oil. I mean, oil has just been very, very quiet. In fact, sort of in a more, if we look at our analytical table here for just 1 second, put the table up. I believe oil is still in a bearish trend. Yeah, oil continues to be in a bearish trend for 1,200 candles already on the 1 hour trend. And as long as we sort of stay underneath this $80, maybe $82 level, that naturally creates a tax cut for the economy, right? So lower oil, no significant increases in gas prices, no significant increases in heating. That really keeps the economy going. Should this change, this is the one variable that really worries me. Should this start to go up to 85, 90 for whatever geopolitical or other reasons that may occur, that's going to be a big problem, because I think the combination of consumer contracting and oil prices going up, literally the worst possible scenario for the economy. So this is a saving grace right now. We need to keep an eye on it into the next week or so. And as long as we stay underneath that 80 level, we'll muddle along. We start putting ourselves into the 80, 85s. That's going to translate into some very, very negative impact, I think, into the next month or two. So that's how we shape up. We're going to trade in my room today, and then tomorrow, trading live with everybody. We're going to trade oil. We're going to trade everything: NASDAQ, gold, S&P, maybe even a little bit of oil. We'll just do everything we can using our scalping methods. Love to see you guys there. Come free for live trading tomorrow, and then obviously a big event on Wednesday. Kay and I are going to trade together the CPI. That'll be the granddaddy of all today for the week. I'll see you guys later in the markets. Everybody enjoy.
So we have some questions. We have a question here from Paolo, which is a great question. Why does a stronger dollar push inflation down? Is it because it makes things cheaper? I mean, basically, that's it. I mean, with a stronger currency pushes down inflationary pressures, and a weaker currency elevates inflationary pressures. So that is why when a currency is too weak, it can become a problem for a country. Now, if we talk about Japan specifically, the currency is too weak, but in Japan, they've been battling deflation, not inflation. So they've been more accommodative and willing to accept a weak currency. Whereas if you're in a country like the Eurozone, for example, if it had a very weak currency, then that could be very problematic because if inflation, because ECB is so inflation focused, and with fighting inflation, if the currency was too weak, it would drive up inflation too much. But when we look at the dollar index, we're talking about all of this in the context of how the dollar actually rallied between in the month of April, which is bearish or negative for inflation. We have another question here. Is there any dollar cost expense is there any hidden cost or expense when not using dollar pairs? I mean, really, it's just the roll, right? But the US has roll too, rollover fees. So I don't think there's any additional cost or expense aside from roll, but roll could be positive, roll could be negative, depending upon whether you're long or short the currency pair. And then VIX has been quiet and closer to major support. Yes, VIX has been very quiet and closer to major support. And the market is clearly consolidated, waiting for the inflation number. All right, so with that, great questions today. Boris will see you all tomorrow for live trading the futures market at what time, Boris?
9:15. 9:15.
Want to drop the link into the YouTube live stream?
Yep. Let me.
So why do I not trade pound? I don't trade pound because usually my stops are too tight for pound. And maybe you don't want to share your screen, Boris.
Okay. Well,
I'm seeing everything. Just pause your screen, Boris.
So I'll just go to our channel and go find my link. Okay. I can't do this right now.
Okay. I mean, it just takes a second. I'll do it, guys. Hold on. You just got to go to the channel and I'll drop in the link for the live stream.
Well, but you're showing your screen. You're showing your screen.
Here you go. There you go, guys. All right, just took 1 second.
Yeah, but you don't want me to do it on the thing. So you're showing your screen. You tell me not to show my screen.
Yeah, but my screen's got not my email. And so and all the back end for YouTube Studio. So here you go, guys.
Your screen. I just saw it.
It's not. I'm using a different computer to share all of that. All right, guys. So we will see you tomorrow. Boris will see you tomorrow for live trading the futures market. On Wednesday, I will join all of you at 8 a.m. So Boris is live trading. What did you say, Boris?
9:15.
9:15. And then we are going to be live trading 8 a.m. on Wednesday. And, we'll rock and roll with all you guys. All right. Thank you so much. And check out all the links that we put into the chat, and feel free to, ask us any questions in the comments. Have a great trading week.